And PPC was founded in 1892 and is South Africa's largest cement producer, but a bit of a dramatic story on this one.
Look, it went into a big expansion phase a couple of years ago, building and buying its way into the rest of the African continent. And it's found itself heavily indebted, needing to do a rights issue, and its banks, and it's, it's
also seen a downgrade from the ratings agencies, which potentially has just pushed the company over the edge. Anyway, before we get into the discussion, market cap 5.1 billion rand, a PE ratio here of 5.9, dividend yield of just over 4%. So all looks in order if you look at that dividend yield of 4%, but the house is not in order right now.
Yeah. Bronwyn, as you rightly say, you look at that and you think, wow, this is value, less than 6 PE, nice dividend yield. The question is it sustainable? And you've touched on some of the problems with which we've had to contend. Other problems are there's a lot more competition in the space that used to be theirs. So I think the dynamics have changed quite significantly. The push into the rest of Africa, the African continent now is contracting at a rate that I never thought possible even 6 months ago. Absa Capital is now looking for Nigerian growth of minus 0.5% this year, to just give you a feel for what has happened because of the rapid fall in commodity prices. So the move into Africa isn't really so good for anyone at this point in time. So you kind of look at PPC, which until a few years ago was a real widows and orphan stock. And what I mean by that was that it really was very, very sound,
consistent,
great
defensive.
Dividends. Yeah. And now, let's put it politely, it's not.
But I want to understand the impact of that ratings downgrade, because as Paul points out, needing to do a rights issue, and then everyone's saying, listen, don't think this is a good idea in terms of lending money effectively to the company.
Exactly. It means that the cost of borrowing obviously is going to go up. It just makes it that much more difficult to borrow to finance everything within your operation.
Let's look at the share price graph before we go any further, Paul.
It looks ugly, ugly, ugly. So they've hit what they'll call debt covenants, where the banks kind of force them to raise more money, but now the banks, you know how they say with banks, if you owe a bank a small amount of money, then it's a problem for you, but once you owe a bank a lot of money, it becomes a problem for them. So now it's sort of in between, betwixt. It's going to have to do a rights issue, but we don't know at what level. They don't want to do it in a way which is highly dilutive, but they're going to have to. So CEO Daryl Castle and his colleagues really got their work cut out for them. I want to series of missteps.
A big question here. Is PPC going to survive?
Look, it may, but it's going to be in a much smaller form than it is now, I think. And I wouldn't be putting money in this one.
If, on the other hand, you own it and you have money already in PPC, what would you be doing?
I'd be looking to put it in something else.
Just cutting your losses and getting out?
Because I think it's going to be a long haul. If it's going to survive and if it's going to be okay in the longer term, it's going to be a very long-term prospect. Don't forget, the outlook for the South African economy is bleak for the next few years. We're going to struggle to get much beyond 1% economic growth for the next few years. Against that kind of background, it's difficult to see where the growth is going to come from in PPC if you take into account the other qualifications that I mentioned with the rest of Africa.
Look, it's tricky. I mean, with African Bank, I remember I sat in this chair, I think it's the same chair, and said that you could carry on and just hold if you hold them, but it would have been better to get out.
And of course you did carry on holding.
And then it all went to zero. So I'm not suggesting that's going to happen with PPC, but it could, and I think it's definitely not hot.
Sometimes better to cut your losses. Definitely not hot.
Ice cold.
Says it all.